Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Stock Market Recap. And this is January 18th, 2025. Welcome to 2025, folks. And remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, the market, well, the triple bottom that we mentioned last week held nicely the last 2 days of this past week. Yeah, it gave us a little scare, but we saw some very nice moves in the market Thursday and Friday. In fact, one of the days was the best for the NASDAQ in months. And remember, the market is closed on Monday as the administration changes to establish a more favorable business climate. And folks, that's good for the stock market. And our weekly stock analysis video, well, which stock is better for your portfolio? Yeah, let's do a comparison. The famous BlackRock or Arthur Gallagher, which you never heard of, did you? But it's growing faster than BlackRock as Arthur Gallagher beats BlackRock 250% over the past 5 years and also beats the S&P by that amount also. Now our ETF video, have we done with our favorite portfolio this year so far? Well, last year and over the past 5 years and this year, we beat the market, and we beat the market soundly by 400%, well, close to 400% over the past 5 years. Now, if we can repeat this performance again over the next 5 years, we can all go to the beach without a worry in the world. So let's get right to the market, folks. And here is the S&P 500, and here is this triple bottom I was talking about. Now, it's not a true triple bottom, but if we look back all the way over here, we can see this gap in the market, and gaps are always filled, or so the saying goes, and we can see this line right here was where the market stopped going down, and this little horizontal line right here is the low of the market and where it opened, and this is where it closed right here. You see this little line to the right, that's where it closed, and it closed inside this bottom band, and that was the giveaway, folks. And the following day the market went down and then came back up and closed again above the previous day closed, and then Wednesday, Thursday, Friday, it just took off like a rocket. Went up to that 20-day moving average, came back down and tested it on Thursday, and then Friday just rocketed right up. So it looks like we're going up, well, we're right at this 6,000 level, just a little bit below it by a few points. And so you're going to see Tuesday and Wednesday, because remember, Monday the market's closed. We're going to see Tuesday and Wednesday this market try to get to that top band once again. And down here we have good news. Finally, this indicator it's an intermediate term indicator and being oversold. So in other words, it came down past the zero line, which meant it was oversold, and finally has turned up. So the blue line crossed over the red line, and folks, this is a good signal, and it's a pretty reliable signal also. So things are looking pretty good for this 3-day weekend coming up here, and next week, and hopefully for the next 4 years. And then when we look at the Dow, we see the same type of thing. We see this Dow coming down and testing this line all the way over here. And remember, here's another gap in the Dow, just like it was in the S&P 500. But the market came all the way down to test this area in here, held and closed at the top of this particular day in here, which was Monday. And then Tuesday, same thing as in the S&P, went up and then all of a sudden just took off like a rocket. Now here's something to realize that we were looking at very, very closely. You see here, from here down, the market made a lower low. Up here, this indicator, which is a stochastic indicator, did not make a lower low, in fact made a higher low. So right in here we have a higher low. Down here in the market, we have a lower low, and that's called a bullish divergence. So that gave us the signal, along with this intermediate term indicator down here, all gave us positive signals, and this market just took off like a rocket. Very, very nice move for the Dow finally getting out of this doldrum of this long-term downtrend. Even though it's bouncing around in here, this indicator was still saying look out below. There could be more downside action. And so on this particular day, which was a Friday of last week, we saw that it was a nasty day. And then finally Monday, the market did very, very nice by recovering, went down to test this little low in here, and of course all the way back in here, tested that low one more time, and then closed near the top of the day. A very, very nice day on Monday, and that set the tone for the rest of the week. So folks, it's looking pretty good right now, and we're hoping for and we're looking for an up week this coming week. Now for portfolio protection, the January 17th SPY 500 puts expired. So we went out because the market did move up. We went out and we bought the April 17th SPY 510 puts. So with the SPY sitting around 600, we are bringing these they're not stops, they're protection about 12 to 15% below the market. And don't forget, if the market starts to fall, these puts will gain in value as the market goes down. And where did we get the money to buy this put? Well, we put on a spread, a call spread position on the QQQs, which is the NASDAQ 100. And if that works out and it's just a week hold on that position, that'll pay for two of these. So it's for each one of those positions that we put on in the QQQs, it could pay for two puts. So we can even go out into May if we wanted to. But that has to work out. We'll see how it works out this coming week. So, folks, we're protected again. The January SPY 500 put expired. And remember, SPY is 1/10 of the S&P 500. So this 500 doesn't mean S&P 500. It means the level that we're out, and we're moving that level up as we go along, and the market climbs little by little by little. So we like that kind of protection in there. We don't have to worry about every day trading or looking at the market every day. This is protected 12 to 15% below the market, and we do a few covered calls or spread calls during the month in order to pay for these. So this is doing very, very well. So folks, we had a tough start to the end of the previous week, and then this week it started out pretty good, halted for a little while in there, and then took off like a rocket on Thursday and Friday. And with the inauguration on Monday, everybody's pretty happy with a pro-growth administration coming in, and we'll see how that works out. But the market so far likes it very, very much. So, folks, if you want to walk on this beach like Jimmy Buffett used to do so many times, then you've got to learn how to invest even better than Warren Buffett does now. So, folks, go out, have a great weekend, stay safe, and we'll see you back here in a couple of days.